Good afternoon, everyone. Hey, this is Bruce Marshall from Simpler Trading with the nightly market update for Wednesday, January the 22nd. And it has been a crazy month so far. As we know, we've gotten just crazy rips higher, continuation from the market, that we had last year, of course. And it's been a little baffling, I guess, to say the least, for me, just because of the magnitude and the continued just relentless push higher. It's just buy the dip, buy the dip, buy the dip. And the market is obviously getting very stretched, in my opinion. And we've been looking at this for quite a while and trying to figure out, where it might go and all that kind of stuff. So let's jump in and look at the S&P. And if you did not see it, we hit another new all-time high today, 33.37 lifetime high in the S&P. And it just seems to not want to stop, right? So let's go out here. Of course, this is a 10-day chart, and I mean, this is beautiful, but it's been just any dip, any dip has just been bought, buy the dip, bounce, buy the dip, bounce, buy the dip, bounce, buy the dip, bounce, buy the dip, bounce. Right here, buy the dip, bounce. And that's the way it's been for months and months and months and months and months. And as you can see, this is a 1-year chart. If you see right here, that's October. So we've had October, November, December, and now we've got, good bit, most of the way through January, with basically no, it's been pedal to the metal the whole way. So the reason I mentioned that, we all know that, we all see it, everybody's scratching their head wondering, how much further can this thing go and all that stuff. And, I thought in normal, quote unquote normal situations, normal times, you have more of an ebb and flow just based on profit taking. I really thought people would start peeling some off at the end of the year, portfolio managers in particular, big institutional guys that that get bonuses on all that stuff, would really take some chips off the table because they had great returns. They should be up 28, 29, 30%, something like that in general if they're just following the S&P. So I thought that would happen. It didn't. I thought some profit taking some tax loss selling might happen. Of course, that would have been a little more selective areas like the weed stocks and stuff like that. That didn't really happen. I thought starting the new year, people might wait for tax reasons to start taking profits over in this year, this tax year. You see that little white line right there? That's 2019's on this side, 2020's on this side. So you take taxes on this side, you take your capital gains on this side, and it puts it out to 2020 taxes, which are paid in 2021, and then you get a free ride for a year on those taxes, instead of selling it right here, right? And that didn't happen. So the next thing is the China coronavirus, or the Wuhan virus, or whatever it's called now. And I thought, well, surely that's a pandemic or whatever, can't be good for the market, and the market just shrugged it off like nothing happened. And that's a little baffling in itself, but let's do a 5-day chart here. Or let's do a 3-day chart, because this is when it kind of was, I guess, officially breaking out. It's right there is when I saw it. This is an overnight. This is the ES overnight. So we're just rocking on, ripping higher into the close, just going. And here we flushed down. We went to 33.07, I believe, was the low right there, and for the night, and then we just came right back up and kept going like nothing ever happened. And at this point, there was, let's see if I can remember correctly. I want to say that. Yeah, I want to say over here, when this thing broke out, there were 4 people had died, and now we've got 17 people that have died, and we initially had 270 infected. Now we got 440. The numbers are coming up, and I mean, we gave a little bit back today. I don't know if that's what it's from or not. I really don't know, but I thought it would be a bigger deal to the market. It's not. So far, it's not. And China is saying, don't worry, we've got it contained. And, I don't know how you contain a city of, you know, millions, what is it? 11 million people live in that city. Yeah, I don't know how you're going to really contain that, but we'll see. So all that leads me back to, to the S&P. And again, I'm just looking at the S&P. All that leads me back to here to say that we are primed and ready for this thing to blow up. And blow off top, I guess, is a better word for it. It's a little more appropriate. That and have a pretty decent sized pullback. I mean, 100, 200 points in the S&P. We're up about, I don't know, I can't even remember. We're up 400, 500 points off this low. We're up 1,000 points from the low back here. So it would make sense if we had a large size pullback. But at the same time, this is Wednesday. Guess what? Next Tuesday we've got Apple reporting. Guess what's Wednesday? We got Fed meeting on Wednesday. We've got Tesla reporting. We've got Facebook reporting. Thursday we've got Amazon reporting. So is everything going to tank ahead of all that big? That's a lot of stuff going on next week. And I kind of don't think so. I mean, I'm looking at all the volume open interest, at least in the S&P and some of these other names. And again, it's just been buy the dip, buy the dip, buy the dip. So we have to assume that the momentum continues at least into some of these, events next week. So for now, I've closed a whole lot of positions. I'm very light, being very selective on entering new trades and stuff like that. But for now, again, we have to keep playing to the upside. And the expected move here, we're at 33.37 and we closed at 33.21 with an expected move into Friday of, I think it's about 21 points. Let me double check here. Yeah, about 21 points. So that gets that could, if we go up, gets us at 33.42. If we get that close, we're probably going to reach up and hit 33.50 Friday, and there is bigger open interest and volume right there at 33.50, big magnet. So that's very, very, very reasonable that we would do that. On the other hand, subtract 21 and go down to 3,300 or so. But again, it's getting tougher and tougher and tougher to make a call here because none of this is making much sense. The correlations are all off. If you look at stock market's going up, bond market's going up, gold, crude, and also the fib levels, the voodoo levels, we just keep going right through them like they're not even there. So very, very, very tricky market. One of the trickiest markets that this little window that we're in right now that I've seen in a long, long time. So again, be careful, keep some cash, be waiting for the other side of that roller coaster when we go over the top and come back down. And and I don't want to sound gloom and doom. Apple and Facebook and Google and everybody could come in and crush it and raise guidance, and this thing could keep going, and we could be looking at 4,000 very soon. We could just keep going, but we shall see. We've got to take it one step at a time, and that's all we can do with this market is just baby step it one day at a time and even 1 hour at a time, because just like today, we thought everything looked great. We're going to come up here. I thought we were probably going to keep on going today, and then we just immediately rolled over, and then we're going to rally. No, and we rolled over. So, be very, very careful in this market. So that is what I've got for now. Hang on, hold on to your hat for next week, Fed meeting and all these big earnings coming up, and we'll see what happens. So thanks for the time, and I will see you at the next update. Take care.